All right, good afternoon, everyone. Today is Tuesday, January 29th, 2013. And let's go over the results from the live trading room. This morning, the crude oil, we were up 10 ticks on crude, we were up 9 ticks on gold, and up 6 ticks on the NQ. Nice to have a positive number on the NQ there. That was the live trading room. So far in the live trading room for the month of January, we are up $3,677.50 per contract, excluding commissions. That's in the live trading room. While I'm trading a whole bunch of markets and answering questions from 100 people. While we don't recommend you try to trade 8 different markets or try to trade and answer questions from 100 different people all at the same time, if I can do it doing that, once you learn the trade setups, it's really very simple. Pretty straightforward. You should be able to do it as well. All right. That said, if you have not taken a free trial with us, go to www.cfrn.net/apply. Sign up for the free trial. In the free trial, you get 5 days in our live trading room, 2 hours per day from 9:30 in the morning to 11:30 in the morning Eastern Time. Every business day, we are open. And after the while you're taking the free trial, you'll have access to our indicators. You can download the charting platform and use the indicators on the charting platform during your free trial. All right, you'll have access to Dwayne and myself. If you have any questions, you can ask them. You'll be in the live trading room where you can ask questions freely. And as it is in here, in the live trading room, the only ones who can see your questions are myself, Dwayne, and Bert, usually. Bert is our broker. Okay. Let's see. I just want to do that. Make sure Bert can see your questions. There you go. Success was what? We are plus $3,677.50 after today's live trading room for the month of January. That's per contract, excluding commissions, though. Okay. Some days, commissions can be as high as, I don't know, $100 a day some days, I suppose, but usually they're not that high. Okay, usually it's more along the $50 range, something like that. All right, now, that said, we are going to move on to the actual trades that we took this morning, okay? It took us a little while this morning. I told you we were going to start keeping track of how long it takes me to make 2 points every day, and today it took me 81 minutes. Can you believe that? 81 minutes. That was because we started out with, I believe we started out with a couple of losing trades again. But let's just do the crude oil. I'm going to go from the left to the right with my charts. Okay, we took a bunch of trades in here on crude. You can see we ended, at one point we were up $180 a contract on the crude alone. But we lost this one right here, right at the end, and that was minus $80 a contract, minus 8 ticks. But let's just go through the crude trades, okay? Now the actual setup, I'll bring my picture up again.
Rob.
Up. Yay.
All right.
That
right. Still on?
That right there is David.
For the radio.
We're going to mute David. There we go. David is muted. He's calling Rob, who's going to be coming on for the radio program later. All right. This right here was our morning on the crude. Okay. Let me bring up my picture again. I was trying to bring up my picture. Here we go. This is the setup. It's a simple, straightforward setup. You just look for the bullish cross. Step 1, the crossover. Step 2, a pull away. Step 3, test of the BBC with an up close. Step 4, look for divergence. You enter on the up close. All right. That's if you have, when you're going long, if the cycle is still blue on the up close and you have divergence, like right in here. Okay. That's exactly what we did right here. If you look at that picture, the bullish cross, the pull away, the test of the BBC with an up close, and right down here we had the bullish divergence. All right, so I got long on the up close right there, and I took some profit. This was our first trade of the morning. We had the same thing going on over here, and I ended up losing that trade right there. I should have gotten in over here. I think I did actually get in over here, and it went a little bit in our favor, and then it turned around and stopped me out. So, I lost the first trade. And then I got a break even on the second trade, took some profit on this trade, took some profit on this trade, took a lot more profit on that trade, and a lot more profit on that trade. Now, this right here, this example right here, when there's so much momentum in the market, the price doesn't pull all the way back down to the BBC, and you still have some divergence. The cycle may or may not be the right color. In this case, a close above the trend line is a confirmation of the continuation of the trend. When it's got this much momentum, you draw these little trend lines on here, as you can see I've done. The close above that trend line is what you're looking for. All right, I did that last trade right there. I think I took 10 ticks profit on that trade right there. You can see it kept going much more than 10 ticks, but I took 10 ticks out of it, and I was happy with that. This last trade over here was a continuation confirmation on the short side. You can see it didn't continue. I shorted it right there, and it stopped me out. But you know what? Not every single trade is going to win. You're just going to have to deal with that. Enough trades winning to make the 2 points a day, or more if you want, is all you need. Now, if I would have really stayed focused on the crude oil, there were trades that I missed in here. One here, one here. There's another one in here that I missed right there. I could have gone long. Could have gone long again right there. I missed this short over here, this long over here. Those were all profitable trades in the live trading room. And if I would have just let this trade run, which one was it? This one run right here, then I could have taken a big chunk out of that. Now, how you let the trades run is up to you. I'm really aggressive with my risk management in the live trading room because I want to take profits. All right. Now, when you have divergence like this with the slingshot, you anticipate the green line is going to work its way up into the cycle. Every time when you have this divergence, that's what you're looking for. Okay. You're anticipating that the green line is going to work its way into the cycle. Even over here where I lost this trade, the green line eventually worked its way into the cycle. Okay. That's what you anticipate. So for the trade setup, the indicators that you need what you see on price right here. This is called the CFRN indicator. CFRN indicator. All right, you need that one, and you need the slingshot, the CF slingshot. That's it. That's it. I know the CFRN has 3 separate lines in it, and the slingshot actually has 9 separate lines in it. We're just showing 2. But that's all you need to do the trade setup. And I'm going to go over it on a whole bunch of different markets, but that's it, okay? And that was crude oil. So we ended the day up 10 ticks on crude. Here's the Russell. All right. At the end of the, I guess this wasn't at the end of the live trading room. At the end of the live trading room, it was moving up over here. We had a pullback down test. It actually tested the weekly trading zone right here and kept moving up. We didn't take any trades on the Russell. I don't have a Russell DOM up. It was in and out of the weekly trading zone pretty much all morning. Here at the open, it dropped right down through the BBC into the weekly trading zone. Gave a shorting opportunity right here. You see the bearish divergence, pullback test to the BBC with a down close. If you look at the short side of this. Step 1 is a cross, step 2 is a space, step 3 is a pullback and down close, step 4 is a divergence. So we had step 1 right here, step 2 is a space, step 3 is a pullback and test to the BBC with a down close, and step 4 is a divergence. I didn't take that because it's going right into the weekly trading zone and because I don't have a Russell DOM open. But that was an opportunity right in there. Okay, there were a few opportunities here on the Russell, not too many this morning. There's another one right here that just happened a few minutes ago. This one didn't actually hit the BBC. You see it had so much momentum that it just kept going down. It didn't pull all the way back to the BBC, so the down close right here with a little bit of bearish divergence is what you would have entered on, right? 904.5. I didn't take a single trade on the Russell, so there's not really much to do over there. Gold this morning was, well, it was good. I made one mistake on the gold. I'll show you that. Here we go. And it's right in here. All right, I shorted gold over here, and I ended up taking a break even on it over here. But you can see we had the bearish cross, test to the BBC with a down close. Doing the same exact setup that I did on all the other ones, on the Russell and on the crude oil. Same indicator set, same everything. We had the bearish divergence down here. The cross is 1, pull away is 2, test and down close is 3, and the bearish divergence is 4. I got short there, and I took a break even over here. Once the green line got into the cycle, I took a break even trade over here. Okay, I had to endure all of this. The next opportunity was right over here where it tested the BBC and gave a down close. You see down here, there's blue on the cycle. So you needed to wait for the close below the trend line. I actually didn't I took that trade right there, and I went short right there, and then I noticed it was blue, so I got out of it right away. I got out of the trade right away when I realized I had made a mistake, and I took a 1 tick stop on that. All right, 1 tick loss. It dropped down below this trend line. I was then explaining that I had made a mistake, and I drew the trend line. I said, now we need to close below the trend line. And then it closed below the trend line, and I missed the trade. But but as frustrating as that was, you just have to keep taking the trades. You take them as they come. And that's what I did. All right, the next opportunity, it did this really quickly right here. Right here, from this drop down, that entry right there, it went like 20 ticks, 20 or 30 ticks, something like that, really quickly. And then it went sideways for a little while, and there was another opportunity to go long over here. I got long here, and I took 10 ticks profit on that. Okay, you see the green line? We had the divergence. It went just about up into the cycle, and I took profit on it. That put me at +9 on the gold, and that's where I ended the gold for the morning. All right, you can see right in here it's been really choppy since then. Little 4 or 5 tick moves that you could have taken profit on a couple of times in there. All right, that was the gold. Now the NQ. I'm happy to show the NQ today. The NQ had some really nice trades this morning. Let's see. My first one though was a losing trade, right here. All right, as it seems to have been the last few days. We had a bullish cross, a test of the BBC with an up close with bullish divergence. I got long, and it stopped me out to the tick, I think, or it went. I have an 8 tick stop on every single trade I put on, regardless of the market. It's an 8 tick stop, and this one went down 9 ticks, stopped me out, and then it went up, which is, just the nature of the beast. Once it went up there and it topped out, it turned around, and there were opportunities in here, right here. 1, 2, 3, 4 opportunities right here. I missed all 4 of them. I must have been trading something else at the time. And I missed all 4 of these opportunities. They were very nice opportunities. Could have taken profit on any one of those with minimal drawdown. The only one that I think really drew down more than a tick was this one right here. Drew down about 2 ticks. Yeah, the CSTD. Yeah. All right, and here we have a bullish cross. Now, I'll bring my picture up again. It's the same exact thing. Okay? You're looking for the bullish cross, the space, the bullish divergence. All right, I got long in here on the up close, right in here on the up close, and I got my 8 ticks profit back on that loss trade that I took earlier. I got the 8 ticks profit back on that one. I took another trade over here on a close above the trend line. Because it was red on the cycle, I had to wait for the close above the trend line. I ended up taking a break even on that, and on this one over here, I took 6 ticks profit on this. This was the other side, the bearish cross, pullback test to the BBC with a down close, and I took 6 ticks profit on that. I didn't take any more trades on the NQ, but there were a bunch of them. It got a little choppy in here, but you could have gotten long in here a couple of times. Actually, no, we didn't have divergence to support anything in here. Sorry. Could have gotten long right there at the top, and we still didn't have divergence. It would run out. Over here, right toward the end of the morning session, I'll just go through. I'll draw some trend lines on there for you when we have divergence. Let's see, this one right here. It went all the way up here without giving an opportunity. All right, there was a spot right here, but we didn't really have any divergence, so right here would have been the spot to get long. It had some bullish divergence at the time. And now it's turned around and started to come back down. So if you remember the steps, 1, 2, 3, and divergence is 4. So right over here, shorting opportunity, and let's see, another one right in here. All right, and that was it. Larry, they aren't what you're suggesting they are. They are other stuff. All right, let's see. In here on the ES, there were a couple of opportunities this morning as well. All right, right here, we had a bullish cross, tested the BBC with an up close with a bullish divergence. So right in here for the move up. Okay, again, it happened over here. Bullish cross, tested the BBC with an up close with a little bit of bullish divergence down here, and it went up again. Okay, it went zone to zone this morning, which is something we haven't seen lately on the ES. Let's see here. We didn't take any trades on the yen. There was one over here that we had pointed out that took forever to happen. There was another one over here that we pointed out that again, took forever to happen, and now it's turned around and gone the opposite direction. And let's see. This is natural gas. We didn't take any trades on natural gas either. We started to draw some trend lines on it, but the opportunity just wasn't there. There was one spot up here where you could have gotten long for about 4 or 5 ticks. It turned around and came over here. Right here you have a test of the BBC. The down close would have been right in here, below the trend line. All right, I'm just eyeballing the trend line, but that's the trend line. The down close would have been right in there with the bearish divergence. All right, soybeans. We haven't looked at soybeans yet. Okay, from the open on the beans, right in here, there was one opportunity right here on this up close, another opportunity over here on the up close. Then it turned around and started to go down. And as I said yesterday, when the soybeans start to go down, or they start to move around, really, they tend to. It's like a train, stopping a train. They don't tend to stop immediately. They drop and drop and drop. So you could have had a bunch of opportunities in there. Okay. Can I take a minute and explain the relationship between the cycle and the divergence? You bet, Alan. Let's do it. Let's do it here on the NQ. All right. When I talk about divergence, what I'm talking about is this green line moving away from this cycle portion of the slingshot. Okay. The green line moving away from the cycle portion of the slingshot. When you look at the slingshot, the properties of the slingshot, the only things that you have set to true are the S3 cycle on and the S1 fast on. Set those two to true, all right, when you apply the slingshot. And the S1 fast on is the green, the S3 cycle is the blue and red. What you want to look for is the better divergence is when the cycle stays the color that you're going to trade. Like if you're going to go long, you want the cycle to stay blue. And then if you have divergence like this, where the green line is pulled away from it, like this, okay, the green line is pulled away from the cycle, and then you get a continuation, like a close above the trend line. It doesn't matter what direction the green line is going in. All right, you're not waiting for the green line to turn up or the green line to turn down, anything like that. You're just waiting for the close above this trend line. Okay, that's what you're looking for. Okay, that is what that's what I was doing this morning. Okay, in this case here, this was a good case of divergence over here because the cycle was still red. Tested the BBC and gave the down close. We got short right in there. All right, in here, the cycle turned red and we were going long, so you need to close above the trend line. Over here, the cycle was still blue, so we didn't need to close above the trend line, even though we got it. Okay, that's it. If you go in, Alan, I think I don't remember what workshop number I go into the divergence about, but you know what I'll do? I'll send you a video about it. Something that we did in November. Okay. All right, guys. With that, I'm going to wrap up the morning session, the recap for the morning session anyway. I think we were plus $220 a contract. We were plus $300 a contract at one point, but I think we ended the morning session plus $220 a contract. And again, it wasn't an easy trading morning. The first hour, the first 81 minutes anyway, were not easy trading. But after the first 81 minutes, for some reason it kicked into gear and there was a lot of money to be made. We are currently at $3,677.50 profit in the first 2 hours in the live trading room in the month of January. My goal is to hit 4,000 by the end of the month. We'll see if I can get there. What do I need to get? $333? Yeah, about that. Actually, $323. So I have 2 days to get $323 to get to 4,000. Well, hopefully we'll do that. All right. If anybody has any questions, you can email us. I see it, Darryl. I see it. If anybody has any questions, you can email us at support@cfrn.net. Email us at support@cfrn.net. All right. That's it. Going to wrap it up.
Okie doke. Thanks very much, Michael. Great opportunities in the trading room this morning, guys, and a lot of opportunities to see what it looks like when a trade works out and when it doesn't, okay, and how you recover from that. And last night's blog post, actually written by Michael, he talks about how to handle a losing trade. You know, it can be a sneeze or an earthquake. I believe those were the analogies that he used, and you learn over time if you know you're doing the right thing. Well, you know what? Just go read the blog post. You know, rather than me try to paraphrase it, you just go read the thing. You can read it after the show, or you can read it during the show. It's up to you, but it's on the blog, and so go there. All right. Let's see. I believe we will bring David on right now, so that he can bring Rob on. Rob's going to dial in. I gave Rob the number. I gave David the number to give to Rob to dial in. I remember the last time it was a little. We had a challenge getting him on and getting him live, but we're going to try that today. For those of you who've not taken